the stock market's reaction, at least, has been, well, they've sort of dealt with it reasonably well. Clearly, the surprise to the upside means in the short term that the Fed needs to work a bit harder, and that's that 75 basis points might not be enough, and that might mean we get that 100 basis point hike in just a few short weeks. But one of the reasons I think stock markets have dealt with it reasonably well is, of course, commodity prices have been pretty weak through June and actually through July as well. Obviously, the prices themselves, the nominal prices are high, but they're well off their highs, and that has something of a lead, of course, on inflation, and that could well be why inflation expectations have remained pretty contained as well. So, of course, that July rate hike is going to be pretty bumper, but there's still room here, a tiny bit, but there's still some room here as we move through the year for central banks to ease off, and certainly the Federal Reserve, ease off the pace at which they've been hiking at the most recent and the upcoming meeting. And that's not like a classic Fed put, I'm not talking about interest rate cuts, but a slower pace of hikes could well be received, would be received well by markets, I think.
Ben, do you think markets are looking down the line, or are they just jumping at the data at this point? I mean, for many years, we used to look at the series and cast ahead, but people were so wrong-footed when it came to the inflation numbers and the messaging from central banks about it being transitory that they're now jumping at the data points when they cross. At what point do you think the market starts to flip and takes a longer-term view of inflation?
Well, I mean, that could have been yesterday, that flip, if you like. I know markets didn't rise, but markets sort of didn't, sorry to use the term, the stock markets didn't puke on the news. Certainly some volatility, and the reaction may not yet be over, of course. You know, there are plenty of traders and hedge funds and trend followers that could yet exacerbate some action. But in the short term, at least, you know, as I said, the stock market reaction has been relatively benign, and that could be that signal that you were sort of alluding to, that stock markets at least are looking a bit further into the future on the basis that, you know, among other things, commodity prices have been a bit weaker. We do have that switch from ongoing switch from buying goods to services. The base effects themselves could yet weigh on inflation numbers. And of course, you know, demand is going to, we're seeing the slowdown, aren't we, in the data as a function of interest rate hikes and the inflationary pressures that consumers have already been dealing with. So, yeah, I mean, the market reaction is a welcome surprise, but could be one that reflects the market is now sort of believing we're at or around peak inflation. I know reputations have been lost on calling it, but you know, we could well be around that period.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.